Hello, and thank you for joining us at XM.com for this special report. We'll be looking at the US dollar, which has gained about 15% since the beginning of the year, and so far, nothing seems to phase its rally. How did the dollar manage to reign supreme? But where do we go from here? I'm Cristina Marujos. Helping me answer these questions today is our senior investment analyst, Geralabos Pissouros. First of all, Geralabos, let's see how we got here. Other major currencies like the pound and euro are trading at multi-decade lows against the US dollar. What served as fuel to this dollar rally?
Hello, Christina. Yes, indeed, the dollar has had a stunning rally, and what has been constantly fueling its tanks is not a single force or catalyst, rather than a blend of interconnected developments. Now, with many economies still licking their wounds after their reopening from strict COVID-related lockdowns, supply shortages led to a spike in consumer prices and then delayed response by major central banks as they initially dismissed the inflationary pressures as temporary. Now, on top of that, Russia's invasion to Ukraine and the reduction in energy supply to Europe resulted in skyrocketing oil and gas prices, adding even more fuel to inflation's flames and leaving central bankers no other choice than to raise interest rates faster and more aggressively. Now, in this tightening race, the frontrunner is the Fed, raising rates faster and to higher levels than other major central banks. So, higher interest rates and thereby treasury yields in the US compared to other major economies have been the main driver behind the greenback's current uptrend. The co-driver is safe haven flows, with major central banks around the world raising interest rates fast to tame inflation, as well as a lot of uncertainty surrounding several major economies like the Eurozone, the UK and China. Investors' anxiety worsened due to fears that tighter financial conditions will add to the likelihood of a global recession, prompting them to sell other currencies and buy the US dollar.
Currently, though, speculation is that nothing really can bring the dollar down, especially in an environment of tighter monetary policy and an aggressive Fed. But what could potentially change an otherwise optimistic dollar outlook?
Now, in terms of monetary policy in the US, investors believe that the Fed will stop raising interest rates in March at around 4.6%, in line with the Fed's own projections of 2023. But still, despite Fed officials keep sounding ultra hawkish, pushing against the case of a rate cut next year, market participants continue to see rates 20 basis points lower by November. So, this divergence between the market and the Fed near the end of next year is the room that the dollar has for strengthening further if indeed Fed officials keep appearing in their hawkish suits. So, for the greenback to trade significantly lower, one must give in. Either the Fed softens and admits that interest rates could be reduced next year, or the market brings up its projections and stops pricing in any 2023 cuts, after which there would be no reason for future hikes to drive the dollar higher, as they will be already discounted by the market, unless Fed officials appear more hawkish than they already are. Now, changes on the global growth front and geopolitical landscape are also required. Oil and gas prices may have come off their highs, but with the war in Ukraine still raging and Russia supplying very little to Europe, a harsh winter could boost demand for heating energy, resulting in another rebound in the aforementioned commodities and thereby more inflationary pressures. In turn, central banks could eventually harden their efforts to bring inflation to heel, raising rates even faster and hurting their economies even more. For investors to abandon their safe haven positions and thereby sell more dollars, either the conflict in Ukraine needs to end, with Russia restoring to full capacity supply to Europe, or the winter ends up softer than expected. But any of these scenarios needs to also be accompanied by encouraging economic data, not only in terms of improving economic growth, but also in terms of meaningful easing in inflation around the globe.
Geralabos, thanks so much. This was a special report here at XM.com on the US dollar.